Welcome back, traders and investors. We have a real special guest on today. We have Ed Cahill from Lutz Research that covers the solar sector. Ed, how you doing today?
Doing well. How are you?
I'm doing good. I was just teasing you a little bit because I was looking at your picture at Skype here, and you remind me of all these young bucks we have here at Benzinga. Just give us a little bit of your background and on the markets and your current occupation and what you're doing here on the pre-market info show.
Sure. Let's see. I graduated from Middlebury College with a degree in physics, and since then been working with various clean tech companies. Worked with Enernoc, which is a smart grid demand response company, and Fraunhofer doing PV module research and development. And then decided to go into the market and business side of things, and went with Lux Research, which is a technology scouting and market analysis firm, and focusing on solar.
Okay, so the solar sector is definitely one that gets a lot of ink in the markets. Very volatile stocks with high PEs. A lot of analysts that take a negative approach toward the issues, but you seem to take the other side of the coin.
Yeah, so my perspective is from the technology side of things. I don't really follow the stocks. Yeah, they are pretty volatile, and for good reason, because the industry is pretty volatile. It's kind of in its adolescent phase in its development. So like any teenager, there's lots of ups and downs.
Okay, so I guess one of the primary arguments, that the bears are using it. These solar firms are highly subsidized, and some of these subsidies are scheduled to go away. How is the solar sector going to compete with when these subsidies go away with other cheaper energy sources?
Yeah, that's always the biggest question. The whole point of subsidies is to, I guess, encourage growth in the market so that the technology itself can compete on an unsubsidized basis moving forward. So, I mean, taking away all the other arguments that fossil fuels are also subsidized, et cetera. The two key ways that solar is going to be able to compete without subsidies is to reduce its costs, and to solve the problem with intermittency. And when I say intermittency, I mean on the electric grid, at any one point, the amount of energy going onto the grid needs to be getting used by the end users. And when the sun is shining or not shining, you can't really control that. So that causes some intermittency on the grid, which makes it harder for utilities to balance that load. So those are the two problems with solar. So how it's going to compete moving forward, reducing the cost. The best way to reduce the costs is actually to increase the efficiency of the technology, because you just need a vast amount of area to collect enough sunlight to turn into enough energy. So by increasing the efficiency, you reduce the amount of area of all that material that you need for the same amount of watts coming out. In terms of the intermittency, there are a lot of energy storage technologies coming out, but it's even more nascent than the solar industry. So there are other strategies. So solar thermal, for example, is a different technology that can integrate with natural gas power plants that can help react to changes in sunlight.
Okay, so we just going back to the subsidies here. What is the current status of the subsidies, and how are they going to be phased out?
Are you talking in the U.S.?
Yeah, well, we have federal, we have state, we have local. Let's start with the federal because that's probably where the primary subsidies are coming from, correct?
Yeah, so the biggest subsidy is the federal investment tax credit, and that's a 30% subsidy, and it's lasting through 2016. So in 2017, it reduces to 10%. So that's a 10% of the upfront project costs. So that's a big jump, and so companies have the 3 or 4 years to get those costs down to start qualifying for projects at a competitive level. At the state level, there's mostly solar is driven by renewable portfolio standards. So the government requires utilities to satisfy demand with a certain percentage of renewable energy. So, for example, California aims or targets 33% renewables by 2020, and that's already at 20%. So it's got 13% more to go, and 2020 is that deadline. So whether or not they increase it after 2020, some say they are. And then, of course, every state has a different renewable portfolio standard. There are also state renewable energy credits that give a little bit extra money for solar energy production in states like New Jersey and Massachusetts, Maryland, for example.
Okay, so as these subsidies go away, and the key for the solar companies is to make the energy cheaper to produce. So what new technologies are out there that are going to enable these companies to have a lower production costs?
So the incumbent solar technology right now is crystalline silicon photovoltaics, and that's the market leader. That's 80 to 90% of the capacity and production out there is this technology, and it's fallen 50 in price by 50% over the past 3 years. And a lot of that has to do with scale of the all the different steps in the manufacturing that has decreased the costs. But moving forward, really some new technologies need to take that efficiency that I was talking about up to the next level. So adding passivation layers to the solar cells, fine tuning the electrical contacts using replacing the expensive silver with things like copper, for example. And then also the next step beyond that is to even start growing the wafers from the bottom up instead of getting big ingots and slicing them, because that reduces the waste in the process, and that's called kerfless wafering. There are also other technologies like thin films, for example. So First Solar, for example, uses cadmium telluride thin film, and right now it's the cost-leading technology. It takes less energy to manufacture. It's better in really hot conditions, making it good for utility scale desert conditions. So those are those large projects in the desert that you see. And First Solar has it's putting a lot of money into its R&D to increase those efficiencies, and it's being pretty successful at doing so.
Okay, another argument of the Bears for the Bears is site suitability. You have arid, cloudy areas with frequent rain. How is the industry dealing with that?
Yeah, I mean, solar is not going to be the only source of energy anytime in the future. It just doesn't make sense in some conditions. Russia, which has a lot of natural gas and not very much sunlight, it's not going to move into a ton of solar electricity. So that being said, the energy diversification is a very interesting issue because solar can hedge some volatile gas prices, for example, or anything like that. So utilities are always looking to kind of diversify their energy portfolio, and solar has a nice feature where the utilities sign contracts with the owners of the power plants for a steady dollar per kilowatt hour for 20 to 25 years. That doesn't change, so there is no volatility in that pricing. So that's one advantage of solar.
Okay, so you're coming up with a 2025 projection for solar kind of to be hitting its stride, with natural gas or using natural gas or being more independent. How did you come up with that 2025 projection?
Yeah, so that's looking at pretty much the whole globe when solar will be competitive with natural gas, and that's taking into account all the different geographical, characteristics of each region in terms of how much gas they have, for example, and historical gas prices. And it's also taking into account three different gas price scenarios. So there's a low, medium, and high gas price scenario, mostly tapered around what happens with hydraulic fracturing for natural gas. So in the U.S., fracking is the abbreviated term for it, has made gas prices plummet, really. But there's also a ton of resources in places like China, Argentina, Brazil, Australia. And so that can happen in other regions and can also be exported. That will help, bring those prices down on a global scale. So using, basically the high gas price scenario where only a couple of those countries actually start moving into fracking, and then the low gas price scenario where all of them do. Um, Using those to see the likely case in 2025, that's when all of the regions solar gets within 2 cents per kilowatt hour of natural gas. And this, of course, means that some regions will actually be sooner than 2025, and some will be closer to 2025. But that's I guess, the most amount of time it'll take for solar to be competitive.
Okay, when doing some of the research for this interview, I saw that some panels require 11 years worth of energy production to begin making new energy. Is that a correct statement?
Yeah, I think the research that you're talking about is coming out of like Stanford and NREL have done similar type of analyses, and that is accurate. And I think the one of the caveats in that was when they did that study, 40% of the solar panels installed in the world were in Germany. Now, Germany has the same amount of sunlight as Alaska over an entire year. So, it's not the best place to put solar, but it's heavily subsidized. So, yeah, maybe in a place like Germany, it takes 11 years to do that. But a place, say, the same panel in California, can easily double that production and cut that time to net energy positive in half.
Okay, that's a good explanation for that. And another case for the bulls is being able to handle production and demand. Panels produce a lot of energy during the day. How's it stored and saved to be used at night? And then also you produce most of your sunlight and your energy during the summer, and it's probably most needed during the winter.
Yeah, and so solar right now accounts for a fraction of a percent of the global energy production out there. So at that level, you don't really have to worry about storage because there's plenty of other sources that can produce electricity at night, all those fossil fuel sources, for example. So this only becomes an issue when you get to 20%, 30% levels when you actually need this storage, or you need very fast reacting power plants to help compensate for that, basically to help react to load. So when you get to those points, the cheapest way to do it is actually just to use natural gas. So, in the US, for example, with natural gas being so cheap, it's actually can benefit solar installations because it can raise that limit from 20% to maybe 25% by being able to react to different amounts of sunlight, and during the summer, during the winter, during night, during the day.
And solar production, in order for that to be increased, you need the materials to make solar panels. And some of that material, if I'm not mistaken, is in short supply. Short supply drives up the cost of these materials. How is the solar industry, dealing with with that the production goods?
Well, the incumbent technology that I was talking about, crystalline silicon, that accounts for about 80% of panels being produced, is made from silicon, which is actually the most abundant resource on the planet. It does take a lot of energy to produce that, so that's why thin films use less energy. And now thin films like cadmium telluride uses tellurium, which is a little bit more rare, as well as a little bit of indium, which is expensive. And both technologies use silver, which of course can get very expensive. So there are technologies that are looking to replace the silver with copper, for example. And then, of course, in terms of cadmium telluride technology, First Solar is really the only one mass producing that technology, and they've secured more than enough tellurium to last their expansion plans.
Okay, so let's get down to the nitty gritty here because we got people in our listeners in the Options House chat room here, maybe trading solar stocks or holding solar stocks in their portfolio. Do a lot of research in the industry. Do you happen to follow any of the solar stocks?
No, again, I'm a technology scout, technology analyst, so I don't really do the stocks, but can give you trends in the technology if that's what you're interested
So
in.
you're not putting any money into any solar stocks.
No, I'm not.
Okay. All right. So if you can't tell us what to buy, can you maybe tell people what to avoid as far as stocks in the solar industry?
Well, as the industry evolves, companies are really doubling down on that technology improvement that I was telling you about. And so, the companies that are, sticking with their just mass manufacturing with undifferentiated crystalline silicon technologies, especially companies in China, the federal government in China is looking to cut out some of that repetitive capacity. So they are stopping some of that funding that's been allowed that growth in the first place, and those Chinese manufacturers that don't invest in that new technology will, basically hit the chopping block. So, people like Trina and Yingli, or companies like Trina and Yingli, are investing in high efficiency technologies. But, maybe some of the other tier two and three Chinese companies will definitely start falling by the wayside.
Okay, and just to finish up, I know you do your research into into solar energy and also alternative energy. If folks aren't looking to into invest in this sector and they want to stay away from the solar stock, what are some of the other alternative forms of energy you think that will be evolving, and maybe companies that produce that, would they be something that perhaps they could be on investors' radar?
I think the companies that are able to provide an entire energy solution are going to be the ones most successful moving forward. So, and when I mean entire energy solution, I mean incorporating a number of different sources that can react to what's happening in the market. So, having a little bit of natural gas technology. So, there are technologies like microturbines that can be used for distributed energy, for example, that can also combine with things like solar and wind, and energy storage for that matter. And then also incorporating that with energy management systems that can help balance everything there. So these types of systems have a lot of flexibility and can really react to what's happening in the market. And those are probably the most attractive technologies and companies that are doing that out there.
Okay, JH3 is coming up with a pretty good question here, and it has a little bit of a political undertone to it, but figured I would throw that out there for you. And he's talking about the power structure of big oil, and we surely know what an influence that has in Washington. And his question is will the power structure of big oil ever allow for alternative energy sources to flourish? And he perhaps they're a bit doomed until we use up all our oil, which is not going to be for a long time, or unwind big oil.
Yeah, well, you'd be surprised how much big oil is actually looking into things like solar. Most of the big five energy companies out there have stated that they're planning for governments to start imposing carbon taxes, and they're planning for that future just to hedge that risk in case it actually does happen. And how they're doing that, yeah, it's with renewable energies, with energy efficiency technologies, and moving towards lower impact energy sources like natural gas, for example.
Okay, all right. Well, you definitely have given us an outlook on the solar sector, delved into some of the mechanics of it. We will be following your prediction as far as the ability of solar to not replace the other forms of energy, but perhaps become a bigger part of it. I think that's what your thesis is, and we will keep an eye on some of these solar stocks and see what news evolves, because they are trading at ridiculous valuations. And Ed, we really appreciate your thoughtful research and having you on today, and we certainly like to have you back on as a guest.
Thanks, I appreciate it.
Okay, have a good day.
You too.